Have you ever wondered what global debt is? Who owes the most debt and why? Or even more so, who's lending all this money? What is world debt or global debt? Well, it refers to the external debt developing countries owe to developed nations. And in this regard, the clock is ticking. Welcome back to the Wealth Lab, and thanks for checking in. It seems that every second, someone in the world takes up more debt. The International Monetary Fund claims that the level of global debts reached historic heights during 2020. In 2016, the global debt reached nearly $164 trillion. In 2018, debt levels in advanced economies peaked at around 105% of the gross domestic product, or GDP, which is the highest since World War II. Back in 2018, the total debt was at 225% of the world's overall GDP. On the whole, the world amassed $247 trillion in debt. Approximately $63 trillion is owned by central governments. The COVID impact. In 2020, the world became more indebted than ever because of the devastating and unexpected impact of the COVID pandemic. Believe it or not, the pandemic has added $24 trillion to the already peaking global debt mountain, making a new world record with $281 trillion in debt. The worldwide debt to GDP ratio is well over 355% now, as per the last estimates. According to the Institute of International Finance's Global Debt Monitor, government-sponsored programs accounted for almost half of this rise, while global organizations, households, and banks further added $5.4 trillion, $2.6 trillion, and $3.9 trillion, respectively. This shows that the debt surged by 35% in terms of GDP, reaching over 355% of GDP. This upswing has surpassed the rise we observed during the global financial crisis of 2008 and 2009, where we saw 10% and 15 percentage points respective to debt to GDP jumps. The disturbing fact is that COVID-19 refuses to bow down, and hence, there's little sign of any near-term stabilization. In fact, we expect borrowing levels to go well beyond the pre-COVID rates in many countries in 2021. Low interest rates may further aggravate the situation for many sectors. However, the reopening of economies may help with the GDP to some extent. The IIF estimates that the global government debt can soar to another $10 trillion in 2021 and exceed $92 trillion. While winding down support may emerge as a more significant challenge now than after the 2008-2009 financial crisis, social and political pressure may limit governments as their efforts to reduce debt and deficits will most likely jeopardize their capability of dealing with upcoming crises. Furthermore, this may constrain policy responses for mitigating the negative impacts of climate change as well as a natural capital loss. Who do governments owe the debt to? Whether directly or indirectly, the money borrowed is owed to savers, such as banks lending money out to governments, corporates, and individuals. Banks are typically heavy buyers of short-term government bills. This means they lend money to the government on a short-term basis. Funds are another one of the savers we're talking about. You must have invested your money in a bond fund, or you have money in a pension fund. Many of these funds are heavy investors in government debt worldwide, and governments themselves are among the largest holders of debts of other governments. For instance, China and Japan are the largest holders of US government bonds. So, a government can borrow in its own currency and savor in a different one. Japan is a good example. Given its trade surplus, it holds a large chunk of the US dollar foreign currency reserve. It will invest in USD and US government bonds and lend it to the US government as well. But Japan is a net borrower, so it owes more in yen than its assets in other currencies. Enjoying this video so far? Remember to hit that subscribe and like button. Okay, let's get back to the video. Almost all governments owe money, but why should you be concerned? Almost all governments are now indebted, and most of the debts are in dollar terms. Why does it matter? After all, globally, it's the same scenario that governments owe the money to their citizens, but the rising total is crucial for two reasons. First, whenever debt rises faster than a country's overall economic output, which sadly has been the case in recent years, higher government debt is directly proportional to enhanced state interference in the economy. On the flip side, it means higher taxes in the future. This definitely will impact the general public, which obviously is you. Second, debt should be rolled over at various intervals, which generates a recurring popularity test for specific governments. Usually, the popularity test is conducted just like media houses do for reality TV shows. Contestants who face a public phone vote week after week. If the government fails that vote, just as some Eurozone governments did, there's all likelihood that the country will plunge into a crisis. Why governments borrow money? Governments spend money on various public service sectors, such as healthcare, education, infrastructure, defense, and many other utilities and goods sectors. So, when governments can provide these services on their own, why do they need to borrow money? The simplest answer is that sometimes things don't go as planned. Sometimes governments find it hard to provide these services because tax revenues are less than the predicted amount. Thus, a government can cover the temporary shortage by borrowing money without cutting back on its expenditures. It may be possible that the shortfall isn't temporary, and instead, the government is facing a structural debt. This could be due to the overwhelming scale of a pandemic, which the government didn't expect to occur, such as most of the governments underestimated the scale at which the coronavirus pandemic would threaten the livelihoods of millions worldwide. So, in situations like the lockdown, we all have been facing off and on in almost all regions globally, or disease-fighting measures, which mostly aren't predictable. Governments are forced to borrow big. In September 2020, the IMF estimated in its Fiscal Monitor report that fiscal spending prompted by the coronavirus pandemic amounted to $11.7 trillion globally. This forecast, along with the supplemental economic stimulus measures already in the pipeline, may push the overall public worldwide debt to a record high of around 100% of the GDP. This percentage will be at least 8.3% higher in 2019. The worst part is that the IMF believes it may last until 2025 at least. So the only possible way for the world's governments to dig out of such colossal debt is to take on more debt. Who owes the most debt in the world? It may surprise you, but it's true that the United States, Japan, and China currently have the biggest shares of total global debt. According to the IMF data, the US has $20 trillion in government debt. It is around 1/3 of the global debt pool. Japan is next in line with about 19% of the total global debt. China, which is among the world's leading economies, by growth owes approximately 8% of global debt. You should know that Japan's case is somewhat unique though, as its debt reached 239% of its GDP in 2018 to 2019. Greece, which is also amongst the top borrowers, faces a similar situation. Its debt to GDP ratio is over 100%, while it owes 0.6% of the global debt. If Greece continues at this pace for too long, its debt to GDP ratio may hit a staggering 275% by 2060. That would be a devastating situation. Italy, Germany, the UK, and France are also among the big borrowers. Each of them owes at least 4% of the world's debt. India is next with 2.5%, Canada follows the list with 2.3%, and Brazil owes about 2.2% of the debt. On the other hand, Qatar, the UAE, Lebanon, and Saudi Arabia are the lowest borrowers, with each owing 0.1% of the global debt. Lebanon, although it ranks low in the overall world debt share, its actual debt to GDP ratio is about 150%. Interestingly, the countries that hold the largest share of the world's debt are also those making the most economic progress. China added around 35.2% of the world's economic growth between 2017 and 2019. The US comes in second with a 17.9% share in the world's economic growth. India is the third fastest growing economy globally, as it accounts for 8.6% of the global economic growth. We have noticed that debt rise has been exceptionally high in European countries, with non-financial sectors' debt to GDP ratios in Spain, France, and Greece increasing by 50 percentage points. Enjoying this video so far? Remember to hit that subscribe and like button. Okay, let's get back to the video. Debt rises were sharp in particular in Europe, with non-financial sector debt to GDP ratios in France, Spain, and Greece increasing some 50 percentage points. This rapid buildup was driven mostly by the government, specifically in Greece and Spain. In the IMF's 61-country assessment, Switzerland was the only market economy to record a decline in its debt ratio. As far as emerging markets are concerned, China recorded the biggest rise in debt ratios, but this is excluding banks. China is followed by Turkey, Korea, and the UAE. India and South Africa recorded the highest increase in terms of government debt ratios. So we can say the battle with COVID-19 has made the world more indebted than ever before, and it is expected that there'll be more borrowing ahead. To offset the economic toll caused by the pandemic, the governments, households, and firms raised $24 trillion that brought the global debt to a total all-time high figure of $281 trillion at the end of 2020. But we can understand that there was little choice and might keep borrowing in 2021 despite the COVID-19 vaccines. That's because low central bank policy rates have kept insurance rates above pre-pandemic levels. Those governments facing big budget deficits may increase their debt by another $10 trillion by the end of 2021, as they might find it hard to curb spending. So the debt load may exceed $92 trillion in 2021. What we believe is the biggest challenge is to devise a well-designed exit strategy from these fiscal measures. Not just mature, but emerging markets will need to find a perfect balance, and economic recovery may encourage some governments to develop strategies to roll back stimulus packages. Doing it too soon will magnify bankruptcy risk, and waiting too long may cause unwieldy debt loads. What do you think about it? How can governments develop the ideal exit strategy? Is it even possible? Share your thoughts and suggestions in the comment section down below, and we'll see you in the next video.